This video is just discussing this setup with the EMAs. Might be some confusion that people are getting a little bit confused with. And that is, it's a trend following strategy. So if we just simply break it down and just get rid of this EMA puppies down below here. By the way, this EMA puppies is put together by this person, PPP Strategy, okay? It's that's how it's typically used. If you don't know anything about Daryl Guppy, it's just based on his EMAs. The only reason that I'm using it is because you can have this many EMAs on one indicator, that's all, in a separate pane down below. Now these numbers here, 5, 8, 13 and 12, cannot be changed on this section, but in the inputs they can be changed, but it's not reflected here, okay? You can use a moving average ribbon, which is this thing here, okay? That only has 4 EMAs, and what you can do with that also, if you wanted to, is move it to a new pane below, and that's going to give you exactly the same as this EMA puppies. The only reason I don't do it is because I like to have the ribbon on the chart and I like to have the EMA puppies down below. That is it. So let me just get rid of EMA puppies. And let me just get back to this ribbon. So with my style of trading, I use a 10 and a 20 EMA, and what this means is if the 10 is above the 20, the market is long, and if the 10 is below the 20, the market is short. That is it, okay? You have to have some kind of definition on, is the market long or short, and the way that I determine this is using a 10 and a 20 EMA, and you can see it here. Does it always work? No, okay? But that's just the nature of trading. You can use whatever EMAs you want, but that's what I define as going long or short, okay? Is blue below purple? I go short. Is blue above purple? I go long. In here, it's all crap. I don't do anything, okay? So what I've done, I've just taken the moving averages, the 10 and the 20, off my chart, okay? And instead, I've put a 5 EMA, close of the bar, and a 5 EMA on the open of the bar. And you can see here, the close of the bar is the blue, and the open of the bar is this aqua, light blue, I'll call it, okay? Down below, I have now, let me just take off some things. Down below, there's my moving averages, the 10 and the 20. I just have it in a separate pane. It just gets too noisy up here on this one chart. The 10 is the blue and the 20 is this dotted line. If the blue is below purple, what do? We go short. Is blue above purple? We go long. Now, the 5s are just to help you take an entry or an exit, okay? So you can see here that the market's going long. And you can see here that this blue crossed over at the same time as the 10 did, so we would go long, okay? If we were in a situation, let me see if I can find it, like this, where the market is going long all night, you might see a pullback here on the chart, and this is where these two 5s come in handy, is because the blue 5 will cross over the light blue, and then when it turns back over, which is in here somewhere, you go long, and see how it didn't affect the overall trend. That is it, okay? It doesn't get any more basic than that. What you can do also is to have these same 5 EMAs down here on this clean pane, and I have them set here. So there's one EMA, the 5, that's the close, just like this blue is. I haven't used blue because there's too many blues. And there's the light blue, okay, which is the open, okay? Do you understand? And so now we can see down here on this indicator, now we can physically see it really clear without price hiding everything. And we can see here that there was a pullback. And then the red, see if I can get it a bit bigger. You can see here that price was going up because the 10's above the 20, and we're using, so there's two trends here. There's a long-term trend and the short-term trend. The short-term trend are the two 5s, and our master trend is the 10 and the 20. The 20 is my zero line, like a MACD. Let me see, get up a MACD. Okay, let me just change these settings on the MACD. Okay, this zero line, this flat line, is represented by this 20. That's it. It's just that we can actually physically see that the market's going up, whereas the MACD we can't. It's just flat. It doesn't give me a good visual representation of the chart going up. Okay, and of course the 10 would be like the signal line, sorry, the MACD line. All right, it's sort of, it's not exact, but the 20 is my zero line. So if and when this blue line crosses below the 20, it matches up with the MACD. It was actually a bar or two early, and that's saying we're going short. I hope you understand that. And so now we have these two 5 EMAs on this pane, these EMA puppies, and now we can clearly see the long term and the short term are in sync together, and so you can stay in these trades. When it crosses over here, you can see it, you know, it tried to do something and then it popped back under. You might want to enter here. I don't know, probably not. And here, so it's just another visual way of helping you identify the long and the short-term trends together. Okay, I had them on the chart before and I've put them down here. Okay, that is it. Now, this is a 10-minute chart. You can do this on any time frame. It doesn't matter. It's all just going to work exactly the same. Okay, we'll just keep it on a 10 just for now. This is the NASDAQ from last night. It was terrible. Okay, but you still could have made some trades. Okay, you would have been living in you know, on the side of scariness, but you know, a lot of big wicks here, a lot of drawdowns. But you can see when the 5s are above the 10 and the 20, we're in sync, and then they sort of go out of sync a little bit here. You know, the market didn't go down, it didn't turn around. It was just a pullback, as I mentioned before. It's like fighters in a ring, where they bounce off the ropes. It's just bending, and your entry back in is when this red and on the chart is the blue crosses the light blue. You understand? And so that could be your entry. And now what you do is you marry that up with a shorter term chart, such as a 1 minute, or whatever you want to do. So this is a 1 minute, and you can clearly see the whole thing was long here. So where do you enter? Well, that's entirely up to you. You could wait for this 10 minute to do its turnaround, which is around about here. Okay? So all these numbers, all these EMAs are all the same. You could make this a 2 minute chart. It's just going to be exactly the same. You know, timings will be out slightly, but, you know, so our entry was here. You can see here. It's all very, very, very similar. It's not perfect. There's nothing perfect in trading. You can see here, pullback. You might have scalped something. I'm a scalper. I hope to take 20 out of the market. That's what I'm hoping for. Someone else asked me, where do I take profits? Well, I did mention in a previous video, about having a 12 EMA. And that's where I might like to take profits. I might enter in here on the 1 minute, and then I might exit here on the 12. Okay? Or get rid of the 12. I might enter here on this 2 minute chart. Let's just say it was around about here. I've entered, I've come up, and I've seen the crossover, and that's where I get out. You could get out on the crossovers of the 5 EMAs. It's entirely up to you. Okay, it depends what assets you're trading too. You know, the NASDAQ last night was really volatile, so that's just the way it is. But this is how I incorporate using both charts, using the same indicators, and Is it perfect? No, there's nothing perfect. But, you know, have a look here. So the market was up on this 10-minute chart. We can see clearly here. The 2-minute was up here as well. Okay. And then the 2-minute turned over right here. Have a look at the 10-minute. Now, this is where your experience might help you scalp a bit more. This 2-minute chart is... Oh, what happened there? This 2-minute chart is saying that that 20 EMA has been broken. But the 10-minute chart, have a look. At that same point, the 20-minute is still up. Okay, so this is only stuff that you need to try and work out. The trend is still up. However, this 10 is pointing down. This 5 has crossed under this other 5 on the 10-minute chart. Do you know what? There's a damn good chance, probability, that this thing might turn around, or it might be a very deep pullback. And so that's where your experience will come in and just say, I've seen this 1,000 times, I'm going to give it a go. And had you done that, you've come all the way, you might have entered here somewhere, you've come all the way down, prices bounce back up, and your get out of your trade would be the crossover of the 2 5s, if that's what you use. Okay? So this is all experience that is going to help you with all of this. I did mention yesterday that you can trade with the trend, and you can also trade retraces or pullbacks to the 20 EMA on the larger time frame, because that's what it does. It doesn't always go up, it needs to pull back. And these 10-minute bars, if that's what you use, can produce some great profits, but they can also wipe you out as well. Preferably just trade with the trend, just trade with the longer term trend. I hope that answers some of your questions. Just go back and watch this video again. Hopefully I've explained everything. It's not rocket science. It's just basic EMAs on a chart. Lots of squiggly lines that hopefully will get you into the right position. If in doubt, stay out. Simple as that. Okay, catch ya.